Okay, let's focus on some earnings then that did come in. JMC Projects, well, that stock is on our radar on the back of a pretty strong showing in the first quarter. You had the revenues that ballooned up by close to around 30% odd. To discuss what's the outlook for FY20, we're joined by Mr. Manoj Tulsian, the Wholetime Director and CFO of the company. Hi, Mr. Tulsian, always a pleasure speaking to you. Well, the first quarter has started off on a good note. For the year, what kind of a revenue guidance are you looking at? And if you could break it up for us as well, what kind of growth are you expecting in your infrastructure business as well as in your building segment business for FY20?
Good morning, Nigel, and thank you very much. In Q1, we have actually grown majorly on the infrastructure pack, which is more than almost 85% on a YOY basis. And the factories and building segment has only grown around 7 to 8%. At the beginning of the year, we gave a guidance of 20% plus growth for this year. And Q1 has been, as you have seen, Q1 has been excellent. And we are very much on our target of giving the 20% plus growth for the full year. In terms of the full year, again, the major growth during this year will come from our infrastructure business. We are expecting the infrastructure business for the full year to grow at around 50%. Last year also we grew the infrastructure business close to around 50%. And the factories and buildings possibly would be growing around a mere 5 to 6% for this year also.
All right, 5 to 6% for the factories and buildings and 50% plus for the infra business, which has grown 85% in the first quarter. Mr. Tulsian, if you could give us some update on your BOT assets. They continue to report losses. Last quarter, I believe that you did a loss funding of close to around 8 crore rupees. What was the loss funding that you did in this quarter? And more importantly, what's the update on your plans to sell this business?
So, Nigel, 2-3 things. First, in terms of the operating side, this quarter we have infused another 14 crore on these BOT projects. And but the revenue has been improving. If you really see over the last 8 quarters, the revenue has almost grown by around 20%. So the good part is, and which I maintained in my previous calls also, that now every quarter-on-quarter basis we are able to see revenue growth happening, which is a good sign for these projects. And having said that, I had also mentioned that the board has already given us the mandate to go ahead and sell off either any of them or all of them. So I think, the street will hear something very shortly. We are working very actively on the same, and this year we are very hopeful that we will be able to sell a few of the projects, if not all of them.
Okay, so you're looking at that. Then the street would definitely like to know some more details in terms of this. So if you could give us what was the collection per day in the last quarter, and give us an update on what is the traffic growth as well in the past quarter.
So if you see on a YOY basis, the traffic growth has been around 6%, the revenue growth. And on a QOQ basis, the revenue growth is only around 1.5%.
That's for the BOT revenue growth, right?
For the BOT revenue.
And what about collection per day? What was it at? I think in the last quarter it was around 58 lakh, if I remember right, per day.
Last quarter it was slightly less. This quarter actually we have touched 58.5.
58.5.
And last quarter was around 57 lakhs or so.
Okay. All right. So what exactly is your equity exposure in this business right now? I believe around 700 plus crores. And by when do you plan to have this deal of selling some of these assets? If you could tell us, the sort of money that you're looking to realize by this.
Well, I won't be able to speak on that side of the offshore query. But yes, we are actively working on the same, and as and when a deal is being signed, we'll definitely come back to you. Sorry?
Your equity exposure in this business stands at?
Equity exposure as of June stands at around 750 odd crores.
750 crores. Okay. Also give us an update in your order inflow. I remember last year you had laid out an order inflow, and then towards the end of the year you went and you upped that guidance. For this year, in quarter 1, what was the order inflow? And for the year, what kind of an order inflow guidance are you giving us?
So for the full year, we had given an order inflow guidance of anything between 6,000 to 6,500 crores. In Q1, we have already got fresh orders of 1,100 crore plus, and we have a L1 position of more than 600 crores. So Q1 again has been very good in terms of order flow. And looking at the full year, in fact, last quarter we also mentioned that we are looking at getting some good sizable orders from international during the year. And on the factories and building side, we have some good visibility in terms of getting some good orders down the year. So I think we are very much on track in terms of also getting some very healthy order book during this year. So I hope the year we started the year at somewhere around 10,000 crore of order book, and with a 20% growth, possibly we would be closing the year at around 12,000 crore order book.
All right, so
it will be again very good for the next 2 years of growth visibility.
All right, so you're maintaining your guidance of around 6,000 to 6,005 crores in terms of order inflow. Final question then from my end, your finance cost, that has increased from about 24 crores to 30 crores per quarter. Does that mean debt has also increased? If you could give us an update of the debt on your books and the repayment schedule out there.
So, Nigel, two things. One, if you really see on a YOY basis, as you know, the financial instability, I would say, in the country at this point of time, where so many of these events keeps throwing up every day. The interest cost per se for us has also gone up by almost 100 basis points. So that is one impact, which is visible in terms of the increased interest cost. The second is also that we have been growing at around 20% for the last almost 3 years now. So there has been some increase in working capital, though compared to last year Q1 we are better off in our working capital. We are actually slightly lower on the borrowings only, and then the infusion on the BOT projects, as well as we have done huge capex in the last 4 years.
Total debt, Mr. Tulsian, before we let you go.
Sorry?
What's the total debt right now on your books?
The total debt at standalone remains at around 750 odd crores.
750 odd crores. All right, Mr. Tulsian, thanks so much for joining in. Wishing you all the best for the coming year. And also we'd like to hear in terms of, the BOT sales that you have been speaking about. Let's see whether or not in this fiscal year you can close that out. We'll slip into a short break on that note. You come back, we'll focus on Bharti Airtel. That's the top gaining stock on the